Hello and welcome to your 401k plan enrollment meeting. My name is Suzanne Hall and I work for the Retirement Plan Company. Today we will review the plan highlights specific to your plan, and then we'll talk about the investment options and finally wrap up with how to enroll in the plan. But first, let's cover some basics. What exactly is a 401k plan? A 401k plan is a section of the Internal Revenue Code, 401k. It is an employer-sponsored retirement plan that allows you to contribute money right out of your paycheck through payroll deduction each pay period. And finally, it allows you to make employee contributions that will grow tax-deferred over time. Now, let's get into the plan provisions. With the 401k, there are some plan highlights that you should have received. And those plan highlights will cover the eligibility criteria that's required for your plan as well as the entry dates. Once you've reached the eligibility, you may then enter the plan at the next entry date that applies to your plan. The 401k plan allows you to make two types of salary deferral contributions. One is called a traditional pre-tax contribution, and the other is the Roth post-tax contribution. The traditional pre-tax contribution is where you do not pay taxes when the contributions go into the plan, and you don't pay taxes on the earnings until you withdraw the money at retirement. The Roth post-tax is where you pay taxes up front, but then the earnings portion is tax-free. The Roth contributions are a way of locking in your current income tax rate. So this can be a good option if you're in a lower tax bracket now and you anticipate being in a higher tax bracket later. For 2022, the maximum contribution limits are $20,500 if you're under the age of 50 and $27,000 if you're age 50 or older by the end of this year. And that is the combination between pre-tax and Roth post-tax contributions. Now, additionally, with the 401k, you have the possibility of receiving employer matching contributions. So if you contribute, your employer may also contribute via a match. There may also be what's called a profit sharing contribution. Check your plan highlights for specifics. Each money source may have a different vesting schedule. Investing just means ownership of the money that goes into the plan. Note that your employee contributions are always 100% immediately vested. It is the employer contributions that may have a vesting schedule applied. We've discussed putting money into the plan. Now, how can you get money out of the plan? Well, one way is through an in-service withdrawal starting at age 59.5. Once you reach age 59.5, you are eligible to begin taking money out of the 401k, and the early withdrawal penalty of 10% will go away. That means that you can begin taking money out of the plan and also still contribute to the plan at the same time. Note that in-service withdrawals will be subject to ordinary income taxes for any pre-tax contributions and any employer contributions that have gone into the plan. The second way is through a hardship withdrawal. And the IRS mandates the reasons for a hardship withdrawal. So some of those reasons are for things like unreimbursed medical expenses, to pay for a down payment on your house, to pay for post-secondary education for you or your dependents, for funeral expenses, and other hardships. Please review to your plan highlight sheet for details on the hardship withdrawal reasons. With the hardship withdrawal, you'll take out the amount of money that you need from your 401k, and you would pay ordinary income taxes and an early withdrawal penalty of 10% if you're not age 59.5 or older. However, you do not have to pay back the hardship withdrawal. The last option is an end of employment withdrawal. There are two options here. One is a rollover and the other is a cash out. The rollover is the better option because if you roll over your 401k into, say, your new employer's 401k or into an IRA, individual retirement account, you will not incur any taxes. So you continue the tax-deferred benefit with the 401k, which is the most generous part of having a 401k, is the tax-deferred benefit. The second option is a cash out. So leaving the company qualifies you to cash out your 401k, which is the least favorable option. And the reason is because you will pay taxes and a 10% early withdrawal penalty if you're not age 59 and a half or older. On the flip side, you can also roll money into this plan. So if you have an outside 401k from a former employer or an outside IRA, you can roll either of those into this 401k plan into your account. So now we've covered putting the money into the plan, taking the money out of the plan, but now what will you do with the money while it's in the plan? With this account, you have a variety of investment options. We'll start with the first one. This is called a target date fund. These are prepackaged portfolios based on your target retirement year. So this is the default investment options in the plan if you do not make an investment selection. You can also proactively choose the retirement funds based on the target year that you would reach age 65 or that you plan to retire. These are actively managed for you and they get more conservative over time so that you as a participant do not have to go back in and make any investment changes. So this would be great for an investor who is very hands-off. The second option is called a model portfolio. This is an option if you want to get a little bit of help and recommendations on where to invest your money based on the type of investor that you are. With this option, you can go to our website and answer a few risk tolerance questions to determine which type of an investor you are, and with that, a model portfolio will be created. The next option is that you can create your own portfolio and you'll have a core fund lineup of mutual funds available to you in the plan. So this would be designed for the investor who is very investment savvy and is interested in picking and choosing their own investment options. Our website has a ton of investment information for you, including the fund performance, the fund expense ratios, and you can even access the prospectus for each mutual fund that's in the plan. The final option is called a Charles Schwab PCRA account, or Personal Choice Retirement Account. This is also known as a brokerage window option or self-directed brokerage account. So with this option, you can set up a brokerage account through Charles Schwab and link it to your 401k account. This option allows you to invest in not only the core fund lineup, but now you can invest in individual stocks, bonds, other mutual funds, and also ETFs. Okay, the next option here is to enroll. Very easy steps to follow here. The first thing you'll do is go to trpc401k.com. Then you'll click on New User. And when you click Next, it'll take you to Request User ID and Password. You'll select that option, enter your social, date of birth, and your zip code. And you'll click on Next, and then you'll answer a series of security questions. And once you've answered that, it will take you to the next screen, which will say, I join goal-based retirement income. Click on Next, and then you'll be enrolled in 3 easy steps. Step number 1, choose your investments. So again, Choose For Me would be the default option. You're very hands-off, do it for me approach. Middle of the road option, Help Me Choose. This will guide you through a series of risk tolerance questions, and it'll give you some guidance on the recommended model portfolio for you. And the third option is Choose Myself. This is where you can choose your own investment options and research all of the different investments that are available to you. The next thing you'll do is determine your contribution rate. Here's where you will select pre-tax or post-tax Roth contributions. You can select a percentage of pay or a fixed dollar amount. So decide which option is best for you, and note that this is per pay period. So the example here of $462 is bi-weekly, so every paycheck. Once you make your 401k contribution, you can look at the projection income goal that you see there, the 84% of goal, and you can dial up or down to see how much should you be putting into the plan in order to reach your retirement goals. And the final step is for you to select your beneficiaries. You can select a primary beneficiary and multiple beneficiaries as long as it equals up to 100%. You can also select a contingent beneficiary, which would be if something were to happen to your primary beneficiary, then who would be next in line? That would be your contingent beneficiary. Once you've made your selections, confirm your enrollment options, click Agree, and Authorize. Once you've enrolled in the plan, if you'd like to invest in the brokerage account through Schwab, the next step would be for you to follow here, where you go to schwab.com/PCRA open, and then you'll log in using the specific login criteria for your plan. This information can be found in the Schwab PCRA instructions handout that was provided to you by your employer. You'll have a retirement plan ID and a plan password. That is just a one-time login information that you'll need to set up your brokerage account and then link it to your 401k plan. Once you've done that, then you'll be able to transfer 401k assets into your brokerage account where you can invest in stocks, bonds, ETFs, and then thousands of other mutual funds to choose from. Finally, we have participant services for you. You can contact us at 888-673-5440 and speak to a customer service rep for any of your needs related to the plan. Or you can also go to our website, trpc401k.com, to access your account. This is where you can make deferral changes, investment changes, and request distributions. We're very excited that you've chosen the Retirement Plan Company to help serve your 401k plan, and we thank you for your time.